Welcome back to Dukascopy TV. I'm Elaine Stenson and I'm joined in the studio now by Jean-François Owczarczak, Director with Management, Joint Trust Editor with FinGraphs. He's here with me now to look at the technical aspects of the US dollar pairs. So Jean-François, you're very welcome back.
Thank you, Elaine, for having me back.
Not a lot of Forex news at the moment, but there is some news related to the health of the US corporate economy.
Yes, Elaine. Well, we're in the middle of earnings season. So I think we've had 20% of the earnings in. We still have a lot to go. And I guess the health of these earnings are going to confirm the anticipation of a recovery in the US economy, or now an acceleration of the recovery in the US economy. Now, this recovery, or the anticipation of this recovery, has had a strong influence on trends last year. And the big question in early 2014 is to understand if these trends are going to continue or if they're going to come to a halt. So I've put in our traditional selection that we do every week for Dukascopy. And so what we have here is euro dollar, cable, Australian dollar against US dollar, gold, dollar Swiss, dollar yen, 3 months S&P futures, and 3 months 30-year Treasury bond futures. And what we could see is that from last year, first of all, dollar pairs, or the dollar, was mostly under pressure against the European currencies. It wasn't really a very strong situation, meaning if you look at euro dollar here, you're in an uptrend on euro against the dollar. This is a weekly chart, so has a perspective over the next few quarters. But we still stayed in what could be called a basis. We haven't really accelerated up. A bit more of an acceleration here on cable, pretty much flat on dollar Swiss, and as you can see we have no targets here. That means that if the trend is moving down with a bear indication here, the targets are in the opposite direction. So pretty much a neutral situation here over the long term, over the last 2 years for dollar Swiss. Now, what happened also is with the anticipation of growth came all the tapering discussions last year, and we could see that bonds took a bit of a dive over the last 3 quarters of the year with the whole tapering discussions. These were fraught by increased or anticipation of growth in the economy, and so trying to put a halt to quantitative easing because we could probably afford it. Well, that has had a strong influence on gold, because it was really real interest rates that were coming up. So gold was under pressure because basically it's expensive to hold gold. And let's say it was a leveraging down move that has incidentally had a strong influence on the Australian dollar. And for the 3 months S&P, well, anticipation of growth and of better earnings have basically fueled quite a long bull market. It is getting expensive, but it's still in place at the moment.
Now, could the current short-term correction on some of these trends materialize into a more widespread reversal?
Well, let's have a look at it, because if we look at the hourly mosaic, we'll have a look at what's happening since the beginning of the year. And we do see that indeed euro dollar is moving lower, sterling was moving lower, is now in a neutral situation, Australian dollar still down, but gold is moving up. Interest rates are moving down again, and the dollar Swiss is moving up. Well, basically, this is a bit of a counter trend. It's having a various influence over the different assets. Let's start with each one of them. But in general, the message is that at the moment, it's still too early to call a longer term reversal, and we believe it's probably another week or so to go. But at the moment, this counter move is only intermediate. So let's have a look at all the different ones, maybe starting with euro dollar here. And this is an investor's view. An investor's view is basically a combination of a long-term weekly chart, a medium-term daily chart, and a shorter-term hourly chart. Yes. And you could see at first glance that there's a bull trend on the weekly, a bull trend on the daily, and a bear trend on the hourly. And so as the machine labels it here, it's the short-term trend, the minor, is in a potential downtrend. It's in a bear, while the primary and the secondary trends are still in potential uptrends. And we will call this an intermediate top. So it's only of intermediate nature at the moment. And so Still in an uptrend on the weekly. As said, it's not very convincing for yet. It hasn't really accelerated. In this uptrend, we've just came out of a leg up, which lasted about a year and a half. This leg up had a move up since mid last year, which is slowly getting towards an exhaustion phase. You can see the targets. If we look at the dailies here, the targets have been reached. We're pretty much in a timing zone. There are two envelopes that are touching each other, which is a sign of market stress, of a resistance. And you can see our oscillator is well in the red here. So it's only normal to see some kind of weakness of the euro at this stage. And at the moment, we would label this as a consolidation phase.
Okay.
Now, this consolidation phase is not over. Maybe here, it does have quite a lot of work to do over the daily, over the next couple of months, perhaps. But in the short term, the little acceleration down that we've seen since the beginning of the year still probably has about a week to go, and about another figure to go to the downside. It is getting a bit oversold. You see the envelope touching each other here, but it's still a bit more to go before we could see a new reaction up. All this in the context of a wider consolidation that could work its way through for another month or so. So let's go on to dollar Swiss is pretty much the opposite.
Yes.
Cable has been stronger the whole way than euro dollar. Pretty much a similar situation on the weeklies. The dailies also getting towards exaggeration and exhaustion, but seems to still have a bit of potential here. The consolidation much more shallow. The envelopes have had time to just turn up again. So similar on cable, but just cable is a bit stronger against the dollar compared to the euro. Now let's focus on the equity markets. As said, as for now, we still think we're moving up, although everything is getting quite expensive. If you look on the weekly, you still have the free bulls here, but you've pretty much reached your impulsive targets on the weekly. Pretty much reach your impulsive targets on the daily, and on the hourly you're pretty much up there towards you have market stress, you've reached the targets, your oscillator is in the red, so you might see a bit of a consolidation or a continuation of the current consolidation. Basically the market doesn't really know where it's going in the beginning of this year. Still positive, because if we were to switch to the DAX or European markets, we have done some headway. So maybe a slight consolidation of a week or two while the other trends finish off their correction. But in essence, we believe we're still in an uptrend, and we do have a target towards the end of the first quarter, beginning of the second, to end the move. So now coming on interest rates and gold, they've been very much in sync. Maybe I will put back the daily mosaic here. They've been very much in sync all year. And as you see, they're still on a downtrend on the dailies, as they are also on the downtrend on the weeklies. We're slowly getting towards exaggeration points. We could justify a reversal here, but it's just much too early to actually talk about anything than an intermediate correction up. And so if we go back to the hourlies here, we could see that they're moving higher, and also here probably another week or so to go on both, with a bit more potential here. But at the moment, all these corrections that we're seeing in respect to the trends that went in place last year, we would still consider them as intermediate, and we think the trends will be reinstated. Probably not for the whole year of 2014, but at least over the next 2 or 3 months.
Okay, Jean-François, thank you very much for coming in today.
Thank you for having me.
And that's all we have time for now, but do check back for more updates and interviews from the TV team during the week. That's all for now. Bye for now.